Unfortunately, every new generation of investors seems determined to learn the lesson the hard way. They don't want to cash out. They want to let their gains run. They think guys like me are silly fuddy-duddies, like I never did this myself. It's like they have no fear. Of course, they don't. They have no fear because young people think they're invincible. It's the oldest story in the world. So listen, if you're part of this rookie cohort, believe me, I get it. You had all these grizzled money managers telling you to stay the heck away from the market during one of the greatest rises in history, March, April, May, June, July. Their fears turned out to be irrational. You made a fortune if you bet against them. They were the scaredy cats. You were the opportunist. You got it right. But you can now get it wrong, unless you ring the register on something. I don't want to be one of those scaremongers. I'm just beginning. Here's what I'm doing. I'm telling you to have some discipline. I expect this market to have a near-term bounce, and discipline means you should sell something to that rebound. Not because the sky is full. Like, it isn't. Simply because letting all your gains ride is insane. By all means, leave something on the table. And if you have some spare cash, maybe if you just dodge a 10% decline, do something. But I do want you to play with the house's money if you're up huge. First, why do I say this? Well, because when the market goes up this far, this fast, you're going to run into stocks that can't rally even when they report great results. And that's what happened to all sorts of terrific but overextended tech names last week, including a couple you'll hear from this show. Whenever you see that kind of action, it means you have to do some selling. That's a classic warning sign, even if the companies are great. Second, right now we're witnessing a rotation that's all about a return to normalcy. What does normalcy mean? More travel, so the airlines are going higher. More dining out, so Chipotle and McDonald's and Darden do better. More shopping, so some of the down-and-out retailers that have been left behind can play catch-up. Sure, we have no vaccine yet, and a promising one from AstraZeneca was just put on hold because of an adverse safety event that may cause some people to think, you know what, maybe I shouldn't be in the trials. But you have to admit that things are getting better in the economy. You might think it's weird that we got a terrific employment number last week and it caused the market to get hammered. But that's because big institutional money managers tend to abandon high-flying tech stocks when it looks like business is picking up. Instead, they swap into companies that thrive when the economy accelerates. We also call them the cyclicals. Problem is, tech's gotten so big and the cyclicals have gotten so small that this rotation's crushing the averages. Third, when we get back from Labor Day and election year, politics becomes front and center. Right now, Biden's leading, and while he's no Bernie Sanders, if anything, Biden's about as business-friendly as Democrat can get. He still wants to roll back Trump's corporate and capital gains tax cuts. That means lower earnings per share and lower profits, net profits to you. Whether or not you think that's good policy, it's a concrete negative. Finally, there's so much money in so few stocks, amplified by so many stupid ETFs. I went through them. Those people who issue those should be ashamed. It's entirely possible for big declines in Tesla, Apple, Microsoft, Amazon, Facebook to pull down the entire S&P 500. Bottom line, when we rebound from this sell-off, of which I think we will because it does tend to happen, I'm insisting that you take something off the table into a bounce. Not because you're afraid, not because I'm afraid, but because it's rational. When you win big at the casino, you don't go all in on the next hand. You cash in some of those chips and buy yourself a nice sweater, or maybe, if you really hit it, one of those Brad Pitt sports jackets from Bioni. Wow, there's something.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.